This is very, very important. And gold, going back to gold, as we see it, gold has to stay above the $4,000 an ounce range. Once it solidifies above that, then we see it going much higher. So you're going to see more and more job cuts, and then they say AI is going to cut a lot more out of them. Fed slips nearly $30 billion into cash-starved U.S. banking sector. Yep. Barely reported. Barely reported. The banks are going to go bust. There's going to be an office building bust. You're looking at your office occupancy rate only around 55%. And your office vacancy rate is around 20%, was around 11% before the COVID war in 2019. There's going to be huge failures in banks. They're not reporting this. They're not reporting the buildings that are being sold for a fraction of what they were bought for.
As markets respond to the US dollar's recent rise and the mounting uncertainty surrounding the Fed's next move, gold declines in today's update. As investors awaited new economic data to determine the direction of interest rates, the metal fell over 1% as the dollar reached new 3-month highs. Despite the short-term downturn, seasoned trend forecaster Gerald Celente believes that the world economy is going to undergo a significant change, not the daily fluctuations of gold. He also contends that the Great Recession has already begun, and that every time central banks speak harshly about inflation, the real economy deteriorates. More individuals are using gold, silver, and Bitcoin as a hedge against what he refers to as the economic insanity caused by politicians and central banks as inflation depletes savings and salaries decline. Celente cautions that while mainstream commentators concentrate on Fed speeches and jobs figures, the true trend is a decline in confidence in leaders, fiat money, and the promised future. He believes that rather than being a setback, the recent decline in gold offers a chance for those who are keeping an eye out before the next big financial storm strikes. Don't forget to like, subscribe, and ring the bell for the latest analysis on gold and silver markets.
But again, the billionaires don't give a millionaire, multimillionaires don't give a penny for peace. So going on to your magazine, the Trends Journal, you saw the markets today. The NASDAQ slumped over 2%. The S&P fell over 1%, and the Dow was down 251 points. And that Planetary shares shed about 8%, right? But they're up more than 150% this year, and they're trading at 200 times earnings. So here you have the P ratios are way out of line. And now the media is talking about the AI bust. And we call it the dot-com bust 2.0. They're way overinvested in these companies. And again, that's your magazine cover going back to February 5th of this year. And we called it on January 28th. Oracle fell 4% lower, but their stock's up some 50% this year. I mean, it's ridiculous. The crash could well be happening now. And this guy, David Solomon from Goldman Sachs last night said, quote, there'll likely be a 10 to 20% drawdown in equity markets sometimes in the next 12 to 24 months. 1 or 2 years. I mean, we believe it's going to happen earlier. And again, your magazine cover, your magazine shows it in the sense that what's going on with the banks, how they're bailing them out, and they're hardly talking about it. Moving forward, Brent crude, it's still selling in the $64 a barrel range. Again, OPEC Plus is pushing out more oil. They need more dough, so you got much more supply than demand. And again, there's going to be a global slowdown. Dragflation is going to be drag down economies and increasing inflation. Inflation's not going to stop. And the dollar's going up. And why? I have no idea. But, one of the reasons is less confidence in that they're going to lower interest rates. And remember, subscribe to the Trends Journal. We're giving you history before it happens. And hit the subscribe button on this because we're getting shadow banned and taken off. The numbers aren't where they used to be. And again, we're giving you what nobody else in the world is giving you for the grand total of $2.59 a week in the Trends Journal. So really, hit the link, subscribe, and spread the word. Bitcoin, it was down below $100,000 a coin. It was high as what, $124,000, but it's still way up there. And now it's like its lowest number, for a while. So we're still bullish on it because the Trump team is in it, and they're going to keep, nothing goes straight up or straight down. And again, I want to make it really, really important. Watch this election and what happens in New York City today. This is very, very important. And gold, going back to gold, as we see it, gold has to stay above the $4,000 an ounce range. Once it solidifies above that, then we see it going much higher. And again, the wars are ramping up in the Middle East and Ukraine. And here, I mean, you got just a couple of articles here. Israel violates ceasefire agreement. Netanyahu orders powerful strikes on Gaza. Israel stealing more Palestinian land, begins dividing Gaza in half. Israel violates ceasefire, continues to bomb Lebanon with U.S. support. And they're also bombing Syria, taking more land from them. It's going to keep ramping up. And the Ukraine war is ramping up. They're hitting important oil sites in Russia. And we said this was going to happen. And by the way, because of the sanctions that the United States put on Russia with oil, remember Joe Biden, Genocide Joe, who stole about $250 billion of our money to keep the Ukraine war going? He said Putin's going to pay the price. No, the Germans are paying the price. The cost of energy in Germany has gone up nearly 33% since the war began in 2022, February.
After dropping nearly 10% from the record high of $4,300 in October, gold prices have been trading sideways for almost a week. The Federal Reserve dropped interest rates by 25 basis points last week, but the yellow metal is still under pressure. Because Jerome Powell hinted that more rate cuts are not assured, traders are unsure if the Fed will keep lowering rates. His cautious stance, which was mirrored by other Fed members, bolstered the dollar, which has been limiting the rise of gold. At the same time, the appeal of gold as a safe haven has diminished due to improved trade relations between the United States and China. For the time being, gold and silver are going through a traditional sell the news phase. Prices dropped after the rally was exaggerated by the mainstream media, providing long-term stackers with an ideal opportunity to increase their holdings at lower levels. However, keep in mind that when major banks begin to promote gold and silver, it usually indicates that they want to take the opposite side of the trade. Make sure to like, subscribe, and click the bell icon to get notified whenever we upload new content. We really appreciate your support.
And it's all going to go, we've been writing over years. When the economy falls, jobs go with it. Today IBM announced they're cutting 3,000 jobs. It goes back to the economy. The equity markets have zero to do with Main Street. There's no relationship between Main Street and Wall Street. And we mentioned this before. Oxfam came out with we didn't actually mention it before. It just happened Monday. They came out with a new report that shows how the rich are getting much richer and how everybody else is getting much poorer. And this is in America particularly. This used to be the land of opportunity. It's gone. It's gone. And again, it goes back to that election today in New York City to see what's going to happen. So you're going to see more and more job cuts, and then they say AI is going to cut a lot more out of them. Fed slips nearly $30 billion into cash-starved U.S. banking sector. Yep. Barely reported. Barely reported. The banks are going to go bust. There's going to be an office building bust. You're looking at your office occupancy rate only around 55%. And your office vacancy rate is around 20%. It was around 11% before the COVID war in 2019. There's going to be huge failures in banks. They're not reporting this. They're not reporting the buildings that are being sold for a fraction of what they were bought for. And when the dot-com bust happens, it's going to be the beginning of the end of the equity markets. And remember, when all else fails, they take you to war. And when the dot-com busts happen, get ready for war. What else do we have here? Markets fragility events reach a record number. New poll confirms consumers' dark mood. Again, 70% of America's gross domestic product, nearly, is based on consumer spending. So with all these job cuts, with wages going below real inflation, with Christmas time coming up and you're seeing they're hiring less and less people, the worst is coming soon economically. And article, new trade agreement leaves key issues unresolved. Oh, the ECB plans to test digital euro for 2027. Yep. Digital euro, as we said, from dirty cash to digital trash. That's the way the world is going.
Gerald Celente gives a pretty clear picture of the direction the world economy is heading. He notes that overpriced tech equities, particularly those related to artificial intelligence, are starting to crumble under pressure, and that major stock indexes like the Nasdaq, S&P 500, and Dow Jones are already exhibiting indications of weakness. Celente cautions that the current correction may be the beginning of a much larger one that resembles the dot-com bust of the beginning of the century. The market will eventually reprice companies that are trading at hundreds of times their earnings back to reality as the hoopla subsides. He also cites remarks made by David Solomon of Goldman Sachs, who predicted a 10% to 20% decline in markets over the coming years. Celente, however, thinks that timescale is optimistic and that the downturn may occur much sooner. His logic is straightforward. There is already strain on the banking system. Inflation is still stubbornly high. Banks are being secretly bailed out, and global demand is declining despite an increase in the supply of oil. He refers to this combination of sluggish economic development and ongoing inflation as dragflation, a situation that puts pressure on investors and consumers alike. Despite continuous inflation, gold's recent decline of about $70 per ounce may appear unexpected, but Celente believes it is a part of a short-term decline rather than a long-term turnaround. He highlights that gold may begin a significant upward trend once it remains firmly above $400 per ounce. Thanks for watching. If you like this video, give it a thumbs up, subscribe, and turn on post notifications so you never miss an update.